Aloha, I'm Evan Leong from Brain Gain Hawaii, and welcome to today's Save Hawaii Jobs and Business webinar for June 24, 2020. We had a nice break, and now we're back at it. If this is new for you, we have a resource folder with updated memos and previous webinar videos on YouTube. Please make sure you review those documents before asking a question, since most of the answers are in those documents. Please let me introduce our team for today. First off, we have Jane Sawyer, who's the Hawaii District Director for the SBA and our champion for Hawaii small businesses. Darren Leong is a specialist in employment law from the Law Office of Darren R. Leong. Stacy Katakura is the CEO of Accumulus, which is an outsourced CFO and accounting firm. Jeff Harris is a specialist in employment law and a senior named partner at the Torkelson Law Firm. Buddy Leong is the executive director of virtual student experiences and handles our communications, backend and chat box. Koko Leong is our editor at Brain Gain Hawaii, in charge of content, YouTube channel, and podcast. Beckett Wren is the head canvasser for virtual student experiences and handles our show notes and helps support the rest of the team. Questions will be taken during the webinar through the Q&A module only. It's that module at the bottom of the screen. If you post in the chat box, Buddy will ask you to post it into the Q&A. And then please upvote the questions in the Q&A module, and we'll do our best to answer these questions later in the webinar. This is a fully volunteer effort. Our team has personally answered hundreds of questions, email threads, and hundreds of billable hours have been donated over the past months, and we're doing our best. Legal disclaimer for today is this information is provided for informational purposes only and is not intended as legal or tax advice. Please consult your attorney or accountant to discuss your particular business situation. SBA's participation in this presentation is not an endorsement of the views, opinions, products, or services of any of the participants, persons, or entities. All SBA programs and services are extended to the public on a non-discriminatory basis. This information is current as of now, June 24, 2020. So let's start with Jane Sawyer. Thank you.
Aloha, everyone, and thanks for joining us. Yes, this information is current as of now, but it is fast changing. Anybody who's keeping track of all the information, there are lots of updates as we get close to the end of this program's, the fund availability for everybody. Here in Hawaii, we've made over 11,657 loans for over $670 million. A lot of activity for our banks. It's a lot of activity for our small businesses. Excuse me. And we continue to see changes with the program in hopes of making it more flexible, respond to the conditions on the ground, and those keep changing as well. So I'm glad you're here with us today to kind of go through some of the big changes that have happened, particularly with the PPP forgiveness. I think that the other panelists have kind of gone through to distill down some of these questions or some of the ideas, some of the big changes, such as instead of the 75-25 ratio for the use of your funds, you're at 60-40. We also have an extended period for coverage, or the covered period when you can use those funds. This all came up and started earlier in the month, but you may have the option, if you've gotten your funds prior to June 5th, to extend those as well. So we'll be going through some of those specific things with the program. We even got more interim final rules earlier today, some changes in the forgiveness applications. The forgiveness applications have been changed, and they've come up with an easy form that's supposed to be shorter and easier for you to put together, particularly for sole proprietors and independent contractors. But if it's applicable, other people can use those forms as well. So just in that big, broad overview, I think that folks, why don't you go ahead and take it away to break this down into some of the other components.
Go ahead, Jeff.
Thank you, Jane, and thank you, Darren. So as Jane mentioned briefly, Congress passed the Payroll Protection Program Flexibility Act on June 5th. And since June 5th, the agencies, the Small Business Administration and the US Treasury have, I'm not sure if it's 5 or 6, but they've issued a variety of interim final rules that we've all looked at very carefully. And I'm going to initially try and synthesize the developments in those rules down into about six points, then leave it to Darren and Stacy to clarify a few details, and then we'll answer some questions. And then I also want to, not to be upstage, the U.S. Department of Labor took some action yesterday that I want to mention too. But let me go through the 5 things that really have happened this month. First of all, the amount of the payroll costs that you can use on individuals if you elect the 24-week covered period instead of the 8-week period that existed before June 5th, when Congress acted, has gone up to 46,154 rather than 15,385 per individual if you stay with the 8-week period, which my firm's going to do. There's only 2.5 months worth of 2019 net profit up to 20,833 for owners, employees who elect 24 weeks. And there's some other more specific rules for Schedule C filers and general partners that you'll see in the memo that we recently updated and Buddy put on the website, I think just a few moments ago. Our resident expert accountant may have some more comments on that. The recent changes continue to allow forgiveness for payroll costs paid during the covered period, beginning on loan disbursement or the alternate pay period after loan disbursement. It's clear that the payroll costs are paid when paychecks are distributed or AC transactions are originated. If they're incurred during the payroll period, then they need to be paid before the next payroll date. The interesting point here is, once again, the agencies keep referring to costs just paid during the payroll period, suggesting that you may be able to pick up some payroll costs accrued from before the covered period and pay them during the covered period, or advance some payroll costs from after the covered period's over. Likewise, non-payroll costs, the rules don't really change regarding non-payroll costs, mortgage, rent, utility paid during the covered period are incurred during the payroll period and paid by the next billing date. The only clarification there is here is, while the rules to date suggest that you may be able to pay advance, say your covered period ends in June, you may be able to pay June or July rent as long as you pay it within the covered period, but not mortgage, because the applicable rules in the application explicitly exclude that. As Jane mentioned, the third point that really changed is the statute and the rules increased the forgiven amount allowed for non-payroll costs from 25 to 40%, and the corresponding payroll costs from 75 to 60%. Frankly, for those of you that listened to our group since the start of these many webinars, this has been a long, strange trip already, but since the start of this webinar series, those of you that listened to us and kept all your employees on and kept their pay relatively the same, this is only flexibility change that really applies to you. You have a little bit more flexibility on how much you need to contribute from the loan to payroll. It's now, again, 60% rather than 75%. The next, and really the most confusing changes for those people that opt for the 24-week covered period, and indeed, in most cases, if you adopt the 24-week covered period, you don't have enough money in the loan to cover all the pay that you need to pay and retain all the employees, you'd have to contribute some of your your other resources to satisfy the test, because one of the tests that typically that we have seen before that reduces forgiveness of the loan is if you reduce pay for any employee by more than 24% if they make under 100,000. There's two exceptions to that were really previous the Payroll Protection Act, Flexibility Act, but still apply. The first is if you restore the pay that you reduced between February 15th and April 26th by the day you file the forgiveness application or December 31st if later, then your forgiveness won't be reduced by the 25% reduction in employee pay during your covered period. The other more interesting point for me, although that we have some disagreement among the group, is your reduction of the pay by more than 25% won't result in a denial of your forgiveness if the pay reductions were attributable to full-time equivalent employee reduction. And so there's an interplay between the reduction of forgiveness for the more than 25% pay reductions on the one hand, and the reduction of full-time equivalent employees. With respect to full-time employees, we've discussed repeatedly in these webinars that if you don't keep your full-time equivalent employees during one of the prior testing periods, there's a reduction. But there's a reduction of the forgiveness that you're allowed. There's four exceptions to that, one of which I think people may see very interesting, especially because it hasn't been publicized. But the first one is if the full-time employee reductions did not occur between January 1st and the end of the covered period, then that won't reduce your forgiveness. That's pretty straightforward. The next one I want to spend a little bit more time on because it's new. It came about as a result of the June 22nd IFR. It wasn't in the the June 5th, wasn't clear from the congressional action on June 5th, but the rule really says if the reductions of full-time equivalent employees are due to HHS, CDC, or OSHA safety standards, or, and this is the key point, state or local government shutdown orders based at least in part on 3 agencies' guidance. That applies to us all here. State or local government shutdowns. If you reduced your full-time employee by more than by a significant amount to subject you to the reduction of your forgiveness, this is one of the exceptions you're going to want to look at relying on. You're going to want to be able to see if you can show your banker how the governor and the mayor's shutdown orders affected your business and caused you to employ less employees, and that may protect some of your forgiveness. The next two exceptions from reduction from your forgiveness based on the full-time employee reduction is if you restored the level that you had if you reduced the employees between February 15th and April 26th, and then restored them by the day you submit the forgiveness application of December 31st. That's another exception from the forgiveness reduction. Or as we've said before, if the reduction was due to rejection of rehire, cause firing, voluntary resignation, or requested and received reduction of hours. Again, it's not entirely clear to me, although it's clear to some of my fellow panel members, I suggest that there may be, if you qualify for one of these full-time equivalent justifications for full-time equivalent employee reductions that doesn't reduce your forgiveness, it may also go back and allow you to explain to your banker why you reduced pay for individual employees more than 25%. The final thing that the rules issued in June did about PPP are that it made some major changes in the forgiveness application procedure and extended the loan maturity after PPPFA amendment. I want to mention as an aside, as I said I would before, that the United States Department of Labor got into the act yesterday and clarified some provisions of the CARES Act. And what they said is that your healthcare insurer must cover COVID tests of asymptomatic individuals with known or suspected recent exposure to SARS-CoV as recommended by attending provider. For example, if somebody was out in those protests and they're suspected as a result of recent developments to have been exposed to SARS-CoV based on the increased incidence of reports, and their attending provider recommends the test, the covered employee in your company have a strong argument that your insurer must pay for both antigen and antibody testing. Okay, that's all I have, Darren. Back to you.
Thank you, Jeff. So why don't we take some questions? Stacy, I pinned 2 of them at the top. And the reason I did so is because part of these questions is what we're discussing before we went on. So why don't you take the first stab at that? And then Jeff and I will probably have something to say. Mute.
Sorry. Okay, there's one that just jumped up at the top. It's pretty easy. Is it 8 or 24 weeks? Anything in between? So yes, it's either, as the guidance currently reads, it's either 8 or 24 weeks. Nothing in between. The next question, the new rules for 24 weeks state that the owner of an S Corp is limited to $20,833 for the 24-week period. We also understand that while medical benefits for an owner do not qualify for forgiveness, retirement contributions do qualify. The $20,833 plus retirement contributions are max $28,833 for everything. It's max $28,833 for everything. We also understand that you do not have to wait the full 24 weeks to claim forgiveness and can claim as soon as you reach the max. What if you reach it in just 8 weeks? Can you claim the 24-week amount if you met in 8 weeks, or should you wait for the 9th week and then claim for forgiveness? So you can use a max of the $20,833 if you're electing the 24-week forgiveness period. If you're going with the 8-week forgiveness period, you're limited to the lower amount of $15,385. And this, I think, if you want to wait for so you're right that you can submit your forgiveness application earlier than the 24 weeks. I guess this does assume that you have no employees, because I think if you have no employees, you don't have to meet the salary. You don't have to do the salary wage reduction calculation and the FTE calculations as well. So for sole proprietors, and I know there's a lot of sole proprietors out there, I think that situation would apply to you. Do you want to add anything?
Stacey, yeah, what are your thoughts on if you are applying before the end of your, say, 24-week period, but you are in that category that needs to use one of the safe harbors, of which there are like 3 for FTEs and 1 for salary wage reductions? What are our collective thoughts, I guess, on that?
Well, so the IFR, I think clearly, or it does address the salary wage reduction, and that you still would need to meet the salary, you still would need to do the calculation for the 8 or 24 week period. It's silent on the FTE count. And there's a lot of safe harbors related to the FTE. So I guess, do you want to comment on that? We had kind of gone back.
Yeah, I mean, the one that I have the most question about is the safe harbor, the newer one that says I essentially could not get it. I tried to get everyone back and I couldn't get everyone back, which says, by December 31st. But if you're applying, say, in the first week of July and you're trying to use a 24-week period, but you're only partway through that period, can you, I think the open question, which is unanswered, is whether you could avail yourself of that safe harbor or potentially some of the others.
So there's two interesting things on the on both the application and the IFR. So in the application, you have to state your FTE on the earlier of December 31st or the date you submit the application. And as we just said, you can submit the application earlier than the end of the 24 weeks. The other thing that was kind of interesting was that in the recent, the June 22nd IFR, it also says that the lender has 60 days to review and decide on your forgiveness application. So in theory, you could submit your forgiveness application on the 10th week, and the lender would have to return its decision on forgiveness before the end of the 24 weeks. That's about to work out.
Comment here on the 8 and 24. Again, those of you that continued to employ everyone and paid them at least 75% of their pay, there's nothing in this Flexibility Act for you other than the 60-40 ratio now. All of these forgiveness exceptions are for the people that are going to look for 24 weeks, and there's no reason to expect that, since the agencies have already issued 5 interim final rules in the first half or the first 3 quarters of the month, that there's not going to be some clarification for you over the next 24 weeks. And we have no crystal ball. That we've demonstrated we have no crystal ball, because some of the predictions we've made in the past just haven't. Some of the predictions all of your experts have made in the past have some of them have been wrong. So again, the only clear thing that I want to say now is if you are close to getting full forgiveness on the 8 weeks, and you make the payroll costs, I think I strongly suggest you consider advancing some rent or advancing some utilities and getting out of Dodge, okay? Because there's a lot more action that's going to happen on what the details are over the 24 weeks, based on what we've seen over the last 3 weeks, 2.5 weeks since the statute was amended.
Yeah, I mean, what Jeff is saying to avoid is, by extending to 24 weeks, you extend the time frame in which you need to keep your FTEs, at or above the reference period, and also you extend the period of time that you need to keep salary and wages at least 75% of what they were before. You actually triple the time that you need to do that. And, the PPP funds alone are not nearly enough to maintain those levels for 24 weeks. So if you can squeeze it into the 8 weeks, or if you already did, then that makes sense. The other one that's just, I think, real clear is sole proprietors who made over 100,000 last year. So if your loan amount was 20,833, which means you are in the category of one person who made over 100,000 in 2019, probably based on a Schedule C or something similar, then those should be real clear, because it's net income, and you're going to use 24 weeks, because then you can get the entire 20,833 forgiven. And it's just straight based off of your 2019 net profit. I think one question, and it looks like it would be allowed, and maybe Jane can answer this, is for those people, you are using 24 weeks, but it seems like those would be people in the category where they should just be able to apply early to the bank and say, I'm applying for 20,833. Here's my Schedule C from last year that says 101,000. So Jane, you have a thought on that? Unmute on that.
Yep. Actually, not right now, because there are some questions that we have sent back to headquarters dealing with how people can address this change to 24 weeks. And then also, if there can be pauses in any kind of payments that go out. I mean, the 24 weeks may be the advantage to people who really could not return to business or have any kind of business going on. But we're still waiting for clarifications on these things, and hopefully we'll have them and we can distribute that information very soon to help people make that decision. But if you're real close on the 8-week formula or you've hit it already, I would take Jeff's recommendation and prepare your forgiveness applications as soon as you can and not look back.
On the other hand, Darren, I think the most promising thing for the people that need to I've got a chat here. I wonder what it is. The most promising source of forgiveness is that you document why you weren't able to start up again because of the governor and mayor's orders, and hope that there's some further guidance that helps you with that.
Let's go back to the Q&A. Stacy, you want to pick up the next one?
2 questions. If we extend to 24 weeks, which ends on October 15th, do we need to keep all employees through October 15th or December 31st? So I believe that your requirement to maintain your FTE count is through the end of your covered period, so through October 15th. Again, if we extend to 24 weeks, can we reduce hours of part-time staff? Is there a max? I have heard it no more than 25%. So I think there's actually 2 parts to that question. There's because there's a measurement for FTE and there's a measurement for a salary and wage reduction. They're separate. And the 25% reduction applies to the salary and wage reduction. You can reduce hours of part-time staff. I think if you probably if you use a simplified method of counting the FTE, which counts a part-time employee as 0.5, regardless of how many hours they work, as long as it's less than 40. And as I think Jeff kind of addressed, there's an intersection of the FTE count and your salary and wage reduction. And if you keep the employee's wage, a part-time employee, if they're an hourly employee, as long as you maintain their wage rate or reduce it no less than 25%, if you reduce their hours, you're not going to get doubly penalized for that. Do you guys want to add anything to that, Darren, Jeff?
No, not to that. I will, I guess. I would keep those concepts separate. So the FTE reduction and the salary wage individual employee reduction, they are 2 separate concepts and 2 separate reductions. You could be subject to one or the other or both or none. So that 25%, as Stacy said, only applies to the salary wage reduction. And then the hours piece is going to affect the FTE reduction, which is separate. Okay, want to take the next one?
Next one, our hourly employees, our employees are hourly workers and did not have a reduction in hourly wages. I think we're eligible for the easy application, but need clarification on the bar did not reduce the number of employees or the average paid hours of employees between January 1st and the end of the covered period. Does this mean that we had to maintain the same number of employees every week from January to June? Or are we comparing our weekly numbers to our FTE count calculation in 2019? So the look back period is either the look back period is either February 15th through June 30th of 2019 or January and February of 2020. And you would look at
this one is straight out of the instructions on the easy form. Like to qualify for the easy form, you have to fall under one of the three separate things, and they don't. The issue that's in the question is these descriptions don't exactly match up with what the rules and statutes say. So,
but you don't have to answer all those questions. Yes, that's one possible forgiveness.
Yes, you check box 1, or box 2 or box 3.
Yeah, and I suggest that under the circumstances of that questioner asked, that's probably not the one to check.
Okay, let me get into the weeds just a hair on this one. Okay, so this is the third box on the instructions for the easy form. The context to this is if you fall under one of 3 categories in the instructions for the easy form, you can do this shortened forgiveness application. And this easy shortened form is located on the Treasury website, home.treasury.gov, and then click on the top thing and it'll take you to the page with this application form. So this particular section says if you can satisfy that the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period, and then it goes on from there. I think it basically means for every single employee, meaning you have no salary wage reductions to report. So that's my take on it.
But that's not the only way you can get forgiveness, and it suggests that that the easy application may not work for you.
Yes, the other 2 ways are if you're essentially a solo, if you're self-employed, because that's much simpler as we were discussing earlier. And then the second one is that you did not have, essentially that you don't have FTE and wage reductions. That's a very simplified way of saying it, but pull up the application form and read those check boxes essentially. Okay. Stacy, you want to take the next one?
Is there a deadline to send a PPP forgiveness application if a company wants to use 8-week option versus 24-week option? And I believe you have 10 months to submit your application. Next question: if you pick 24 weeks, do you have to keep your FTE count up for the full 24 weeks? So I believe the answer to that question is yes. There's a bunch of safe harbors that you might qualify for that would allow you to not maintain your FTE count.
We're expecting some more information on that.
Okay. We'll eagerly await that.
Really helpful.
Let's look into the crystal ball for the next one, which is another possible stimulus. I think Stacy saw some on this, but I mean, we're just getting it from news reports. So you want to comment on that, Stacy?
It's the P4, and I know I saw that it had some movement in Congress. I don't know how much movement it was. It appeared to be really targeted towards restaurants.
Yeah, I think if we have another PPP, it will be for a very limited industry sector. But we at SBA haven't heard much that it's been moving on. We're looking at still having a lot of funds available. So what can we, where should those be moved, or how would they use them? There's been some talk about, should we move that over to the economic injury disaster loans, where there's a question of, are they going to have enough money to serve the demand they're experiencing there, or a limited industry group or industry sectors, underserved markets, move it away from the banks to CDFIs and credit unions. But we aren't seeing a lot of movement or backing for any individual plan right now.
Okay. If you are able to qualify to use the easy form, the shortened form, is that the only form you need to fill out? The answer is yes. And again, that form is for anyone who can check one of the 3 boxes on the instructions. Next one is, if I just came up on my 8-week period and kept my FTEs up, do I still need to keep them up until June 30th? The answer is no. If during your covered period, which is 8 weeks, you have no reductions, then you're not going to end up needing any safe harbors. So the June 30th, which is actually the old date, is related to a safe harbor. But if you don't need a safe harbor, if you, like Jeff said, if you did everything that was how the program was rolled out right at the beginning, and you just kept, full employment, then you will not need to go past 8 weeks. Stacy, you want to jump on the next one?
All right, so there's a question on the forgiveness for number of employees at the time of forgiveness application. If we kept all employees during an 8-week period but laid people off after it was finished, how do we show that? At the time of the forgiveness application, we would show less employees than at the time of the loan application. And I don't know exactly why they're capturing some data as how many employees you had at the time you made the PPP loan application, how many employees you have at the time of the forgiveness application, how many employees you have as of June 30th. I don't know exactly. I think that might just be statistical data, because really what matters is your FTE count on the PPP Schedule A. Because that's what your forgiveness is going to be measured on.
Yeah, there's no actual impact to forgiveness for that particular question. So, yeah, it must be for information gathering purposes. Next one, to use the easy forgiveness application, the third option, second condition, quote, unable to operate during the covered period at the same level of business activity. Does this mean if some employees had a greater than 25% reduction in hours because the state had closed our school, could I still use the easy form? Which I guess I would rephrase this question to, what does the same level of business activity mean? And Stacy and Jeff, feel free to jump in, but I don't actually think that it means, I think it seems to drive more toward how open you are in your revenue, and reduction in employees, I guess, would be a part of that, but it seems like it would be a byproduct more than it would be the actual core definition of reduction in business activity, which is, I think, undefined, unless one of you saw something in interim final rule. No?
No.
Okay. Let's see, next question. My 8 weeks ends tomorrow. I'm using the easy form because I kept everyone at same or higher pay. However, I'm not getting I'm not getting a response from my banker. How do I actually file the PPP form? So different banks are at different stages of getting their applications for forgiveness out. We understand that some of them are going to be online, essentially the same questions that are on the application, but they're going to be in like an online portal. And I tend to think there is some hesitation on the bank's part to put them out because the target is not steady and unmoving yet. So I think that is, I'm going to postulate that there's some hesitation on that front. Does anyone else have a comment there?
I would agree with that. I mean, I think on some of the bank's websites, they specifically, I mean, it's kind of unrelated, but they specifically state they're not accepting applications for PPP loans because of they're trying to still understand the Flexibility Act.
I suggest if you want to submit your application now, you clarify with your banker that you're relying on the 8-week period and no forgiveness. No forgiveness exceptions. That just like the earlier question, you kept all your employees, you paid them all the same way. You're going to need to make your banker comfortable to take up that application now.
I think that there are a number of different things here, and one is that some of these changes in what forgiveness looks like because of all these new the new forms, the new interim final rules, and also the bankers are looking at what SBA is asking for them to act on and use to determine how they're going to evaluate what percentage of forgiveness they may grant before they send their paperwork to SBA to clarify. So they're looking at what does it mean that you want me to check the calculations or certify this document. So there are some of those discussions happening. So do collect the best documentation you can, whether it is from your PPO, whether it is your own financial printouts. Remember, you're going to need to retain these for about 6 years, just for record keeping purposes. So the banks will be able to ask you for further documentation if they believe they need it. Best thing is to have really clear calculations to present them and have it backed up by the right documents showing what you did for your payroll and other expenses, things like that. So that's where they're wavering a little bit and waiting for some clarifications. So
yeah, I mean, I certainly understand the desire to get the PPP amount off the books as fast as possible. But at least the nice thing is there's a very wide and long window for submitting the forgiveness application. 10 months from the end of your covered period, and if your covered period is 24 weeks, you're talking well into 2021. No one wants to keep a debt obligation on the books for that long, but at least the window is there. And we suspect once we're in July and a lot of people are going to be clamoring to submit applications, that there will be at that point pretty solid confidence, including from the banks, on being able to accept applications and feeling confident about what the rules that are going to apply.
Yeah, and one of the bank's concerns may be that the rules only give them 60 days to decide.
mm-hmm. They have a huge volume to process. So that's another thing that they're looking at. How do we operate? How do we get these things processed? How do we do the fair job, both for our borrowers and then also to assure that they're going to get the funding, the payments from SBA, from the government.
Yeah, I mean, the processing of a forgiveness application is significantly more cumbersome than doing the loan, because if a lot of businesses are going to contort themselves into the safe harbors and that sort of thing, which effectively is pretty much everyone using 24 weeks other than the solos. They're going to have to contort themselves into one of the safe harbors, and there's, it just requires a lot harder of a look than what's 2.5 months of payroll. So I think there's a lot of work on the bank's part there. Okay, dead horse beaten. Next question. Full-time work schedule is 37.5 hours. Do we count them as a 1 FTE or 0.9? I'll actually be a lawyer taking a shot at a math question, which Stacy can correct me, which is 37.5 divided by 40 comes out to 0.9375, and the instructions say round to the nearest tenth. So 0.9375 rounds off to 0.9. Did I get that right? Yes.
I think as long as you calculate the FTE the same in the measurement period as your covered period.
Yes. Okay. Stacy, you want to take the next one? Hopefully it's a legal question.
If I run out of money in week 14, do I still need to continue to pay my salaried employees for the entire 24-week period at 75% of what they made in quarter 1 in order to get forgiveness? Yes.
Unless you qualify for one of the forgiveness exceptions to the FTE account.
Yeah, so this is going to be like a perfect example of the businesses that are going to end up using the 24 weeks. It's, you didn't end up spending it all in the 8 weeks, which would be a much shorter period to keep FTEs and to keep pay. And in order to spend the money, you need to go into some weeks of the 24-week period. But the downside, again, is that it requires you to keep FTEs, and it requires you to it looks at the reductions in pay for 3 times as long. So one of the examples in the interim final rules is actually if the person normally makes $1,000 and they get paid a week and they get paid $700, so 75% would be $750. So there's a $50 difference. If you're talking about 8 weeks, you're talking about $50 times 8 weeks, and that's your reduction. If you're talking about 24 weeks, you're tripling the amount of the reduction for that drop in pay. So there's a meaningful difference between the two. And so if you are in that category that needs to use the 24 weeks because you didn't spend the money, but now you're facing real significant reductions based on either FTEs or salary wage reductions or both, you're going to turn to the safe harbors and try and fit into one of them, whether it's the, I tried to bring everyone back but couldn't safe harbor, whether it's the I brought everyone back at the point of my forgiveness application at full pay, that safe harbor, or whether it's the because of the government shutdown that business operations were affected negatively, safe harbor. You're going to have to essentially try and squeeze into one of those.
Or if you're still in the 8 weeks, look to the next question, which is our employer 401 contributions paid to employee accounts during the covered period for a prior year fully eligible forgiveness. Try and cram as much of the loan proceeds into that 8 weeks.
Well, that let's expand on that for a second.
Yeah.
Because that is, I think, and at June 24th, some people are right at the edge of, there's a lot of people probably in that 7-week period or in week 8.
Yeah.
So what Jeff is saying is you need to balance, take the 2 scenarios and run which one works better, right? Because if you haven't spent all the money yet, but you have the ability to do so, like you're in the last week and you could pay bonuses, you could prepay rent, you could just shove all that money out before the 8 weeks is over. And then either your FTE and your salary reductions are much smaller, or, even better if you could fit yourself into a safe harbor right at 8 weeks, even better. That might be a better option than extending into that 24 weeks, facing a really big reduction in FTEs and wage salary reductions, and then having to try and squeeze into one of the safe harbors. Right? I think you need to look at both of those scenarios and determine which one might work better.
And those people that are opting on the 24-week schedule because you feel forced to do so, I just noticed that the governor's going to allow international and is thinking about allowing international and mainland visitors with negative tests starting August 1st. That's still another month and a half off. So you're you're looking at a period of time when business will likely not be totally back to normal, and you won't have the loan proceeds to tide you through that period of time.
Okay. Stacey, you want to take the next one?
Yes. So Jeff kind of partially answered this question already.
Yeah.
But our employer contributions paid to employee accounts during the covered period for prior year fully eligible for forgiveness, or only 8 weeks of the amount paid. So the way the guidance reads is that yes, you can pay your safe harbor contributions from the prior year and count that in as a payroll cost.
Yeah, if it's paid within the covered period, the 8 weeks or the 24.
Next question: does paid include check dated and mailed date? I would think it should. It should be the date of the check.
That's right.
It's that's if you want to play it safe, there's a post box rule that the lawyers use, which is delivery presumably 2 days after you mail it.
The next question is, if my PPP loan amount is 30,000 and idle advance is 1,000, my potential forgiveness amount is 33,000. I'm going to stop right there. So if your PPP loan amount is 30,000, the max amount of forgiveness would be 30,000. The idle advance will make if your idle advance is not paid back, it'll make your PPP forgiveness 29,000. So that would be the
There's some
answer
question
there.
on that because idle advances are different than idle loans. So idle advances, particularly those that are made after April 3rd, are supposed to be fully forgiven. So it's another messy IFR, thing in there, and that's what some of the procedural notice is supposed to address. So that's kind of some new things too. I will confirm and we'll get that back to everybody.
Jane, if you got the idle loan and you didn't get a PPP loan, that is an effect that can be considered an advance, correct?
If you got the idle loan after April 3rd, you should have gotten an idle advance as well as the idle loan. So the idle advance has nothing to do with the PPP.
Yeah, so if you got 1,000 per employee up to $10,000 and you didn't get a PPP loan, you can consider that an advance and you don't need to sign any note.
Right.
Yeah.
No note, no repayment. Just get that deposit in your bank account.
Yeah.
So it's
Okay.
confusing in the way they've written some of the information.
Okay. Does anyone want to take
Next one, that's
take one more? Why don't you take one more, Stacy, and then we'll
So-
call it there.
Sounds like a really accounting question. If you have a June 30th fiscal year end, how do you treat the potential PPP loan forgiveness if you have not applied for it yet? Do you account for the potential loan forgiveness income and offset of expenses, or do you treat it like the cash basis and take income in the following fiscal year and reduction of corresponding expenses? So from an accounting perspective, the PPP is a loan and it should be on your balance sheet until you have received for your forgiveness. So if you haven't even applied for your forgiveness, you can't recognize it as, you can't take it off your books and recognize it as yet.
Okay. I'm gonna actually skip and take one more question before we end. Can you apply for forgiveness at 12 weeks? I'm gonna assume that means that you're taking a 24-week period and applying before the period ends. If so, the answer from the IFR is yes. You could apply, if you spent all the money up before the covered period is over, you could apply for forgiveness. There are the questions we discussed earlier on whether how the safe harbors interact there. But again, you will need to still, if you have FTE or wage reductions, those are going to be over the covered period. And then the max amount per employee, if you're using the covered for a $100,000 employee, if you're using the 24-week covered period for a pure employee, the amount is, Stacy, 46,000 and change or something.
Yeah.
For an owner or employee, if you're using the 24-week period, it's 20,833. And then if you are using the 8-week period, the max based on $100,000 salary is 15,385. Okay. Anyone last closing comment before we hop off? Take that as a no. Thank you everyone for joining us. It's been a whirlwind, very short and very long 3 months. And we will perhaps see you all again soon. Thanks. Take care.